Hey, what's up guys? Welcome back to my channel. This is Cree coming to you from Austin, Texas. Technically right now we're in Dripping Springs, but I want to give you guys a quick update. So today, March 24th, 25th, we are now back in Austin, and it's been an eventful last 2 months. We've been in 5 cities in 3 different states in the last 8 weeks, and we've been doing a lot. We were working on a rental over in West Florida, got done with that. Actually, let me back up. So we went to New York to visit a client. A traction meeting up there, came back, got sick. I did not get COVID, my wife did, which is really weird. But we ended up getting put up in a bed for about a week, 2 weeks, something like that. Then once we got healthy again, we went over to West Florida, worked on a rental out there. I did some marketing, looking for some more deals, which by the way, if you have a deal, what I'm looking for is looking for single family and multifamily, small multifamily, 10 to 20 units near major medical centers, universities, within 30 to 40 minutes from the city center. And let's see, we also, once we finished that up, we got to take a day off on the beach, you know, a little workation. Went back, won some money at the casinos. Got back to Dallas, returned the rental truck. We set up a property up in Dallas as well. Furnished rental for corporate travelers, people relocating right near a medical center. Then we got back to Austin. Then we went straight over to Kerrville to work on another rental property, updating some of the systems. Bumped into a couple different investors, some people that might be interested in us co-hosting for them. I got asked to do a build out over in Marietta, Georgia. So that one might not go through because they didn't get the appraisal value that they were looking for. So anyways, we went to Kerrville, set that up, had like a day or 2 off, then came back to Austin to finish setting up another property. And that one's gonna go live in the next day or so. We've got two more properties that are coming up on short-term rental marketplaces. And now what we're looking at is looking at a 6 unit in San Antonio. I'm looking at a 10 unit in Dallas, anywhere from 10 to 20 units. It's kind of like the sweet spot. And we're looking at also starting a car rental business on like Turo and other apps like that to kind of accent or augment our existing rental business with short-term rentals. So by the end of this month, with everything listed and live, we'll have 8 properties in total. And then we're gonna be moving into the acquisition phase. Now, I want to talk really quickly about markets to invest in and like what we're looking for. So a lot of people ask me, what's the best thing to invest in Austin? And I just let them know, unless you got cash to park, like Austin's not the best market. Some people are still adamant about, doing rental arbitrage here, and some folks are, all about buying assets and turning them into STRs or long-term rentals, or, rent by the room, or turning them into alcohol housing for rehabilitation. You name it. I mean, there's a lot of different strategies. You could do senior living, you could do assisted living. Like, there's a lot of different ways to make real estate cash flow. But the reason I'm not a huge fan of buying in Austin is simply because there's a lot of things working against you. There's regulations that are working against you. There's a lot of saturation in the market. There are some good opportunities in the outskirts of Austin. But for the most part, in Austin, like Austin proper, I'm not a huge proponent of buying anything. Unless you're like going to be investing and building out brand new apartment complexes. There's tax incentives right now where the city is actually giving 10 years with no tax on the property. And I'm not an expert on taxes, but you can go ahead and look into that. You just search for Austin apartment tax relief or tax benefits or something like that. You should be able to pull up a couple articles, maybe some city government websites. But for the most part, areas to invest near Austin would be, Leander, Cedar Park, Georgetown, Round Rock, Elgin, Bastrop, Taylor, Temple, all those areas, anything along the I-35 corridor near Austin within 30 to 45 minutes is a good opportunity. You can go lake houses and go strictly vacation rentals. You can do along the corridor and go more corporate rentals, family travel, relocation. We have had some success with doing more family and corporate travel in and around Austin. So let's see. We're focused now on finding and acquiring larger, spacious homes. So if you know of a 5-bedroom, a 6-bedroom, that's within 30 to 40 minutes of the downtown center, in a suburb preferably, that is close to medical or military or university, let me know. 6-bedroom houses, 7-bedroom houses, 5,000 to 9,000 square feet. That's kind of the niche that we're focusing on right now. And also the smaller apartment complexes. Anything from, I would go as low as 8 units up to 20 units. That's kind of where we want to be. And the goal for us is by the end of the quarter to have 15 units, all producing, all up and running and cash flowing. And some of those units we do co-hosting, so we partner with the owner and we run every aspect of operations. And they're just basically hands off, they're a passive investor. And then other units we arbitrage, so we do master leases, and then we turn around and we furnish them and we rent them out. And then some of the units that we're looking at now, we're looking at actually buying them. So buying them with seller financing, buying them with traditional financing. Basically, if you have a deal you think that could be a good opportunity, send it to me. I'll analyze the numbers. We can sign an NDA, whatever, if you feel more comfortable that way. Because we're not gonna post the deal. I don't really need to. I have Redfin hitting my inbox every single day with 10 to 20 opportunities. I don't have enough time to analyze all the deals, but if you watch my YouTube channel, if you go over to the deal analysis video and you do a little bit of the preliminary work, then that'll help me a lot, because then I can look at just opportunities that are really good deals. We don't really look for anything that does less than 30% cash on cash return, 25 to 30%. If it falls below that, what ends up happening is you're investing and risking too much capital for too little return. So I'll give you an example. I looked at a house recently that is up in Arkansas, and the cost of buying the asset, just buying it, is less than $200,000. But when I did the deal analysis and I ran the numbers, even if we do like half of what I think, we'll still be looking at around $1,500 to $2,000 a month. So that ends up being right around the 1% rule, and that's the net number. That's not the gross, that's the net. So what we would do with that is we would break it up into rooms and we'd rent out each room furnished, and that would be the cash flow numbers that we'd be projecting based on that business model. Other houses, we just rent the entire house out, and we're still doing anywhere from $1,500 to $4,000 a month on those houses, fully rented out, completely the house. I was talking to a gentleman today down in San Antonio. We just woke up this morning, just connected, started chatting about our businesses, and we were talking about do you do rent by the room? Do you rent the entire house out? And I just found that if you already have a busy business, if you're running an existing operation, you probably don't have time to invest in another business, right? Because that's what this is it requires daily operations, management of your inventory, management of your cleaners. It requires marketing, it requires upkeep. It's not just like set it and forget it, like a lot of people try and promote. If you're ever watching Airbnb video content on YouTube, you might get hit with an ad from a guy named Brian Page. And Brian, promotes like all you have to do is go over and sign a lease with this landlord and furnish it, and then it's just on autopilot. And the answer is yes and no. There's a lot of software you can use that will do the heavy lifting for you, but it still requires management. It still requires oversight. It still requires eyes on your property. It still requires you to do periodic inspections of the property to make sure that it's being maintained, that it's being cleaned. We just went out to a property in Kerrville, and we were pulling furniture away from the walls, and there was inches of dust. I'm not even kidding. There was layers of dust. There was things that hadn't been touched in months, and it was just it's one of those things where you need to have oversight. You can't just throw money against the wall and hope that it comes back to you. You have to actually be educated and know how to analyze the numbers, know when your cash is coming back to you. I'll give you an example. We have passive investors they bought the asset, they bought the furnishings, and they're expecting a rate of return of around 20 to 30%. That means that, the say $20,000 that they invested in buying the asset, they're looking to get on the whole asset, say it's $300,000, 30% of the asset. That's the gross number that they're looking to get. So if they get that, that'll service their mortgage and it'll pay off that $20,000 they invested plus like $10,000 in furnishings in about a year and a half, 2 years. That's a great rate of return for a long-term asset that you're holding. If you're completely passive, you're not handling the day-to-day operations, you're able to then hold that asset, let someone else run it for you. You're completely passive, so you get all the passive investment benefits. You get the appreciation, depreciation, and the tax write-offs from the mortgage. Now you're looking at a total IRR, internal rate of return, of like 60 to 70%. So that's really good for an asset class when you consider the alternative in the stock market is like 10%, roughly, no tax benefits, that you don't get cash flow in a lot of those assets as well. So you draw a comparison and then you figure out where's your money best deployed. I've got dozens of examples I can show you of assets that we know within a small variance, what we're gonna get on those assets when we invest. When we invest $20,000 in a short-term rental, whether it's midterm stays, with nurses 3 to 6 months, or it's corporate travelers, a couple of days, couple of weeks, or it's people relocating and they need a few months, right? We know within a small variance what we're going to be getting on that property. And usually we are lower than what we actually get in our projections. So whenever I project an asset's rate of return, I end up being, about 20% lower than what we actually achieve. And that just comes from experience. That's not something that you can just go in and dive into your first property and start making gobs and gobs of money. You might be able to, but that's a lot like going to the casino and playing roulette. Whereas I like playing blackjack. And the reason I like playing blackjack is because with basic strategy, it's a game of statistics. It's a game of odds, of possibilities. And if you understand basic strategy, you understand that you decrease the dealer's advantage over you to 0.5%. And I've got real numbers I can actually give you from going and playing blackjack. My first time I lost $100. My second time I made $400. So if you understand how to play the game at a most fundamental level, you have a huge advantage over other people just trying to host. That being said, you also have to know in blackjack how to count cards in order to have an advantage over the house. You get like a 0.5% advantage, but it's all the difference because it then gives you signals when to push in and when to pull back. Same thing with real estate investing. There's signals coming from the market. When a market is exceptionally hot, it's a really risky time to start putting tons of money into properties. When a market is cooled down or is actually on a downslide, it's a great time to start buying properties. And there's markets in this country that are still cooled or they're actually shrinking, right? And that's a good opportunity because all the markets that are exploding, a lot of people are buying on appreciation. They're not thinking about cash flow. They're not thinking about what if they lose their job. They're not thinking about what if their cash flow from their other sources dries up and then STRs become illegal, right? I'm not talking about ordinances limiting your activity. I'm talking about illegal, just like shutdown. And there's cities that have done that. There's cities that have basically taken what people have, like Las Vegas and Seattle, the single family STR business model, and they've made it completely illegal, not allowed to do it at all. And the fine in some of those cities is a lot. In Austin, it's $2,000 per day. That means that if you're investing in the wrong asset class in Austin, you could be losing a lot of money. Not to mention you have to now liquidate the asset, might be at a loss. If the market cools down and we stop seeing that rapid appreciation, you could be walking away with losses. So I always encourage people, listen, don't invest more than you can lose. If you can't afford to lose $20,000, just completely wipe it off the books, you probably shouldn't be investing in. That's one of the reasons why in Austin and the surrounding markets, we do a lot of co-hosting, we do a lot of rental arbitrage, because we can go in, we can actually get set up in the property for a very minimal investment, and we can get the data. Once we have the data, we can make accurate decisions with proximity houses or proximity properties, what we want to invest in. Because now we know, okay, a 3-bedroom, 2-bath in Round Rock, Texas does this much. So if I see an opportunity to buy a house on terms, but buy with a down payment, if I can partner up with somebody that has a low down payment or VA loan, we can get into a property for almost no money down, a lot like arbitrage. But now we're able to spend most of our investment on furnishings. So we can really be above the other competition and start reaping some of those rewards and then turn around and later on sell it. So if you're new to the game and if you're new to this channel, be sure to hit the subscribe button. Be sure to hit the bell icon to get notified when we come out with future videos. I'll be publishing some more videos. I actually have a video editor that I'm working with now, and it's just been a lot of work because we're working on revamping our systems. We're working on automation, we're working on delegation, we're really working on growing to a 50-unit portfolio in the next 2 to 3 years. And it happens through process. It doesn't happen overnight. It's taken me 3 years to get to this point where we have 8 properties. The next 8 are gonna come faster, I know that, because we have our systems more dialed in. When I first started, we started out with a small house. It was a 1,000 square foot house, and we were making like negative $1,500 a month. It was pretty bad. First 3 months, we were losing money. After the 3 months mark, I got some new information. I started implementing it, and we went up to, we were making $500-600 a month. Nothing crazy, but at the same time, that was our first successful property. Once we had that one, then we could just reproduce. We can just constantly iterate, make it better, improve the experience, give a better client experience, add on more services to the property, find other ways to save money. And that's just what it is. That's the game of business. So if you're just starting out, if you're starting a business, then you just have to understand that it's going to take some time. You're not going to be an expert from day one. Unless you have experience running other people's businesses and you have some capital behind you, you may end up not having success right out the gate, and that's okay. I've been doing this entrepreneur journey for about 7 years, and it's actually 9 years. I started in 2013, and had some highs, had some lows, had some wins, and had a lot of losses. I started 3 other businesses before landing on this business, and tried a whole bunch of other things too along the way. But the one thing that if you take away from this video is everything that is worth doing takes time, effort, and energy. And if you're willing to commit that, then you're gonna have success. It's almost guaranteed. But if you aren't willing to commit the time, effort, and energy to actually learn how to be proficient at something, at one thing, then you're gonna struggle. And I struggled for a long time. So I'll leave you guys with that. Keep you updated as well as we progress in our journey of getting to 50 units. And yeah, see you guys next time.